And before beginning, I would love to hear from you. If you are seeking financial advice or have questions, I've put together a very short survey. The link is in the description, and I'm really interested to hear what your single most important financial advice question is. I have some terrific answers and financial advice for you folks today on understanding taxes. Taxes are at the heart of many financial matters. They are often really big percentages. They really do matter, but they're so confusing. Even basic personal income tax takes a whole lot of head scratching to even begin to figure out. Beyond that, the rules of taxes are always changing. Personal income tax is divided into brackets. Each bracket depends on how much income you make and if you are married or single. Every bracket up to your income level applies to you. The highest percent that applies to you is called your marginal tax rate. This is an important term. You should know your marginal tax rate. The average tax rate is a little different. You have to calculate it. You don't just look it up in a table for a given tax year. Everyone's average tax rate is different. The calculation is kind of simple. You look at how much total tax you paid and divide it by how much total income you say you made. That percentage is your average tax rate, and it'll be lower than the marginal tax rate at your highest tax bracket. The average tax rate is a little bit mystifying because you pay varying rates while climbing through the income tax brackets. Different levels of income were taxed at different rates along the way. The average tax rate and total tax bill is even more mystifying because of deductions and credits. You have to know about deductions and credits. Your income, like the amount you get paid, isn't exactly your income for taxes. Oh no. Deductions lower your taxable income. Deductions make it as though you made less money. Making less money is great for taxes because you pay less tax. There are all sorts of deductions. They're always changing. Well-known ones are 401k contributions, traditional IRA contributions, and mortgage payments. What deductions you qualify for and how much you can deduct depends on all sorts of things. The rules are always changing. There's even a standard deduction that applies to everyone as a baseline. The standard deduction is kind of like having a certain income level that won't be taxed. Deductions are confusing. Credits directly lower your tax bill. Credits can be a little clearer than deductions because a $100 credit means you pay $100 less tax. That's a bit easier. A $100 deduction affects everyone differently. You have to calculate that deduction at a certain tax rate, and whether you choose a marginal or average tax rate is often debatable. We don't even know what it means. No, you have to glance at the brackets. Try to know your marginal tax bracket or the highest tax bracket that applies to you because it'll matter for some decisions. Try to have a rough idea of your average tax rate because it's an interesting figure. When you do your taxes or talk to a professional about them, you have to ask about those deductions and credits to try and understand them even more. It's the job of every piece of online tax software to try to ask you enough to figure out which deductions and credits apply to you. They have those awful changing rules programmed right in their robot brains. Thanks a lot for watching, and don't forget to fill out the survey in the description if you are after financial advice.